Hi and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards financial freedom, financial well-being, financial products so you, like me, can reach your goals sometime in the future. Now let's get into the latest video. Now it's not to boast or brag, but this is about my individual savings account review on a monthly basis. It's to give people an idea, if I can build a sizable portfolio, you can too. If you create a plan, you create action. Now let's get into this latest video. So first of all, what are the aims? Well, we're looking for an annual yearly growth of 10%. For this year, 2024, we're looking for dividends of £3,600 and a year-end valuation of £113,000. So how have we done in the month? Well, we started at 117,611. We finished at 116,805. A loss in the month of £806, but we're up year to date of 16.29%, so well above expectations. Now our contributions during the month were £310, quite sporadic. Tax year to date, £2,500. Now our platform providers charges monthly fees on a percentage of the portfolio. It stays about the same each month, just under £16 a month for fees and charges. Now let's look at where the portfolio is held. Predominantly UK based, what we know about. Look at the following graphic: 57.8% in UK and Europe, 29.44% in USA and Americas, and 12.76% in Asia and emerging markets. And we are, shall we say, reducing our exposure to UK more into Americas through some kind of simple tracker funds. Now during the month we received some very nice dividends. Dividends in the month of £370.17. Year to date, £3,831, so about £831 above where we expected. And across our shares, our 10 shares, we've got an average yield of 6.29%. So what dividends have we received? Well, from my LNG technology fund, it's got a small yield of about 2%. We received £31.50 reinvested into the fund through accumulation units. From Aviva, we received £220.62, reinvested 44 new shares. And for Phoenix, the pension provider, £118.05, and again reinvested of 23 new shares. So when the next pelt will be, we'll obviously get bigger and better dividends. But we don't need the money, it's all reinvested, shall we say, on a cumulative basis. So whereabouts are the funds held within the portfolio? Well, at the moment we've got 10 funds, 7 in profit, 3 in loss. Fund values collectively 45% of our portfolio, but nearly £53,000, of which 38% is in the FTSE 100 and 7% is in the FTSE 250. So let's go through the following graphic and see what sort of holding we have within our portfolio. Now remember, these shares are my own personal holdings. I see no reason why I sell any shares in the immediate future. They're all what we call long-term buys, but my own personal opinions. I bought them for a specific reason. Our largest holding is Lloyds Banking Group, 20,163 shares, nearly £11,000, 10% of our portfolio. Now Lloyds had a good run, they were over 62 pence, but then they've obviously had the court ruling about the banking, shall we say, or the car finances, and they've been decimated since. They've gone down to about 54p. So a significant chunk of why our portfolio is down the month because of, shall we say, the car finance market moving forward. What will happen? Is there going to be some kind of redress or PPI claims or car claims in future? The great unknown. We own LNG, the insurance group, 4,749 shares, £10,500, 9% of our portfolio. It was done for the reason we just switched off, considered safer borrowing, but everyone needs insurance, very cash rich, and is paying a very nice yield of around about 9%. We also own Aviva, another insurance company. Again, we got a nice deal in the month, nearly £9,000, 7.5% of our portfolio, but nearly 2,000 shares within, shall we say, holdings was increased, and let's just say a yield of around about 8%. We own Barclays, had a very good result lately. Results were good across numerous banks likewise. 1,561 shares, nearly £4,000, 3.4% of our portfolio. We own HSBC. We were done, shall we say, for diversification away from the UK banks. because obviously where it's based, shall we say, in Hong Kong, China. Going through a restructuring program, the results were very good, the markets were pleased, but we own 535 shares, nearly £4,000, 3% of our portfolio, and it has resumed with a quarterly dividend payment. One banking share that has done very well is NatWest. We own 1,008 shares, £3,500, 3.2% of our portfolio. Very good results on a quarterly basis. The markets liked it, but one thing of note on the quiet is, although we've got a new Labour government, the government has still reducing the shares unknowingly. They're now down to below 15%. So they're selling them off on a gradual basis. They're just not telling anyone about it. Hopefully, full ownership will be removed from the government. And they've got the free shekels. One company that has struggled recently though is Card Factory. We own 3,917 shares. We did top up in the month. There was a reason. But it's £3,500, nearly 3%. It had great results. Profits were better than expected, shall we say. The cash was very good. It will pay a dividend, but it was hit, shall we say, with cost of living crisis or increased wages, shall we say, through the minimum wage and inflationary pressures. But the results were very good. But we've seen it as a buying opportunity. The shares went down, shall we say, about 15% on the day. It's a long-term hold, so did we capitalise on that, shall we say, short-term market sentiment? Another holding that has done, shall we say, good recently is AJ Bell, the platform provider. 731 shares, £3,300, 2.8% of our portfolio. But again, very good results, very good trading figures. Customers are growing, assets under management are growing, shall we say, because it's a simple, easy platform to use. We've got Sainsbury's, the retailer, 911 shares, £2,400, 2% of our portfolio. Hopefully, shall we say, results are out very soon. Has, shall we say, done kind of price match of Aldi, but how will that affect, shall we say, profit margins? But again, very cash rich, and it will pay a nice dividend, hopefully, again in December. And then the final company is Phoenix Group, the insurance company or the pension provider. 466 shares, £2,200, makes up 2% of our portfolio. It has struggled recently for some reason, but it did pay us a nice yield of around about 10% in the month. We can just switch off, but it's something we know about, and it's got a lot of companies because it's done consolidation within the UK pension sector. So a collection of shares, predominantly, shall we say, based in finance, insurance, what we know about, but all good quality companies. And apart from, shall we say, AJ Bell or Card Factory, what we call growth companies, all long-term players. Remember, they're my own personal opinions. And if you like the videos, smash the like button, subscribe to this channel, and let's look at what funds we hold within the portfolio. The funds, shall we say, at the moment we own 9 funds, 5 in profit, 4 in loss, makes up 55% of our portfolio, nearly £64,000. And we have been topping our funds up on a regular basis, shall we say, because we were solely UK based. Our largest holding, as per the charts, is a passive adventures fund through our platform provider. Nearly £24,000, 20% of our portfolio. Just switch off, it's done for diversification, very low fees, given a very nice track record. We own an LNG technology fund, £14,100, 12% of our portfolio. Very low fees of 0.3%, owns about 253 shares, and it did pay a dividend in the month. And as I say, the LNG sector or the technology sector in America has had a very good run lately. One thing we have been topping up though is a Fidelity World Index. We own £11,500, nearly 10% of our portfolio, and we did top up with £350 during the month. It was done for diversification, very low fees of 0.12%, owns 1,400 stocks, and it has got a year, shall we say, record around about 10% for the last 5 years. Just switch off, it does what it says in the tin. Some funds that have struggled though are our China fund, £2,500, 2.1% of our portfolio. We've got an emerging market fund, £1,800, 1.5%, and a second emerging market fund, £1,300, 1.1%. Now, if they ever get back in profit, we're going to sell them funds and, shall we say, reinvest into our other funds we've got just to simplify it. Okay, but they have struggled lately. One final fund of note, shall we say, is a Russia fund. We put £500 in, went up to £60 plus, and it struggled ever since the Russia-Ukraine conflict. It was hovering around about £230 every month, but for some reason it struggled. It's now down to 188. But thankfully it makes up 0.16% of our portfolio. We're not prepared to sell a loss, but thankfully it's a fraction of our portfolio. Who knows what will happen with Russia moving forward. Now, we did earmark some funds for a specific reason. I've kept them separate. We put £3,000 in an S&P 500 fund for a reason. It's now worth nearly 3.3, but it makes up nearly 3% of our portfolio. And we put £5,000 in an FCS All World Shield Index fund. It's now worth 5.6. Again, makes up nearly 5% of our portfolio. But we've done it for an earmarking. We could have used our existing funds, but we wanted to keep it separate. So we've got some really good funds, shall we say. We've had some really good, shall we say. The funds have done much better than the shares during the month. But unfortunately, shall we say, our China and emerging market funds are still struggling. Remember, it's not a get-rich-quick scheme, but just a simple example. I put about £250 to £300 a month. It's a long-term play, but it just goes to show. If I can build a portfolio over 6 figures, you can too. If you put a plan in action, and remember, put all your assets within a tax-efficient wrapper such as LISA. Or your dividends are tax-free, or your gains are tax-free. Let's just say, as per recent budgets, you may want to avoid them scenarios. There's no need, shall we say, for self-assessments. It's all in the wrapper. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again soon.